Let's welcome in our morning guest at this moment. Gaurang Shah is now joining us. We have Lancelot Dikuna with us, as well as Amar Singh and Manas Jaiswal. Let's start with you, Gaurang. What are your top picks today?
Well, so Can Fin Homes has been a great performer yesterday, and we believe that the HFC segment amongst the NBFC is something that looks very, very exciting. In terms of the asset quality also, the GNPL or the NPA are at the lowest levels, and there is going to be increased amount of traction in terms of loan disbursement and of course the policy changes that has been happening. Affordable housing infrastructure status is something that we are extremely positive about for the NBFC sector, and also the interest rates did not come down last time around, may stay stagnant for some time, but maybe a rate cut possibly at the later part of the year could also trigger some amount of positivity. The second one is ICICI Pru with the government decision to line up the divestment of the non-life insurance companies or general insurance companies. I think this is one listed entity which could trigger tremendous amount of traction on the upside, and post-listing, I think after being an underperformer, has started to perform well. And the third one is from the alternative fuel segment, two picks over there, IGL as well as Petronet LNG. Quite excited about these teams as well.
All right, let's ask Manav. Manav, what are your top picks?
See, at the current levels, I like from the IT space, I like Hexaware Technologies. You know, the stock has seen already a decline from its recent peak, and recently the stock has a very good consolidation. It has formed a very good base around the levels of 195, 200. So since it has already seen a good breakout on the weekly charts, I think the stock is very well poised to see a good rally of at least 15-20% from the current levels. And most importantly, the stock after 6 months, 6 to 7 months, has managed to close above its long-term averages with volume. So I think overall it's showing a good structural changes even at the current levels. It has an important support at 205 on the lower side. So I recommend a buy in this with a stop loss of 200 for an upside target of 225. My second pick would be a buy on Godrej Consumer Products. The stock actually has been on a very good momentum recently, and the prices has seen a very sharp reversal from its recent lows of 1550 levels, and since the stock has been in a very good uptrend, forming a series of high tops and bottoms, and the oscillators also on the high time frame charts are still positive, I think in the near term the momentum will be active, and the stock has actually seen a good rally with very good volume. So I think going forward the stock is very well poised to see two all-time highs of 1700. So a stop loss of 1590 on the low side for an upside target of 1700 at least next few weeks could be the ideal strategy at the current levels.
All right, Godrej Consumer is the pick that Manav has. Lancelot, what are your top picks?
Well, I have only one company which I can look at this point in time. It's Nestle India. I think they came out with their quarterly results as well as they announced the full year 2016 results, which were quite interesting, considering that the impact of demonetization seems to hasn't impacted them that much. I think the worst is over as far as the demonetization impact is concerned for Nestle, and I also see an increasing shift from the unorganized players moving to the organized players, and that should help Nestle going forward. Plus the impending implementation of GST will be very positive for Nestle, since that would help them build economies of scale. We've seen them Nestle has regained almost 60% market share in the noodles market, although it's a bit low compared to its 80% domination earlier, but that is an encouraging sign. In keeping with their strategy to broad base the revenues as well as the revenue and profits from a particular product segment, they've introduced 30 new products in the last quarter, and those should start seeing some traction in terms of gaining market share. So while Nestle trades at about 40 times its FY18 earnings, which looks expensive on an absolute basis, it's about 25% discount to its 5-year average P, 5-year average P, which is actually a good entry point to maybe hold on to the stock and maybe benefit significantly over the next 1 to 2 years.
Right. Nestle had declared its Q4 numbers Lancelot. So if you just look at the numbers, let's just revisit them. 16% higher on the sales front. I'm only talking about the Q4 numbers and not FY16. 2,261 crores is the sales number. The PAT number came in at 231 crores. PAT was slightly lower than estimates, but in terms of margins, the company did well. It was not that bad. Gross margins contracted by 90 basis points. EBITDA on an absolute basis came in at about 418 crores. EBITDA margins came in at about 18.5 versus 18.6, and a further rise is seen in the instant noodle space. Remember, last year, November, is when you saw the entire problem of instant noodles, that's Maggi, coming in, and that's why the base effect actually supported for the market share gains. Domestic sales was affected by demonetization. That's something which the management has said, but overall numbers are decent. There is a little bit of negative surprise, but overall the numbers are looking broadly fine. Another stock that will be in focus will be TCS. Board meet to consider buyback on Feb 20th. They have a total cash of around 43,000 crores. TCS, of course, generates very strong free cash flows of greater than about 100% every quarter. Last 2 years, in different format, the company has been giving some money back to the shareholders, but this time around, it seems to be big. Maybe it's peer pressure because Cognizant, along with this results, gave out a very big buyback schemes for its shareholders, and that's why it could be quite interesting. Just looking at some scenario, 10% buyback would mean 1.5% of their market cap. 25% would mean about 4% because their net worth is about 73,000 crores. So that's the numbers that we've worked. And of course, other IT companies will also be in focus. Likes of Infosys, HCL, Wipro, all of them have a lot of cash. So all these companies would be in focus. The first focus will be on SBI and the second will be on TCS and what happens over there. Both these are, of course, expected to react to news flow. That's SBI for you, 8 rupees higher, right from the word go, 275, 276. Tata Motors, 441, that's about 5 rupees higher. Tata Motors, don't forget, was one of the top losers in the last couple of days. Infosys is up around 1.4%. Tata Steel is flat with a positive bias, 1% higher for Tata Steel. Hindalco, 0.3% higher. Zee Entertainment, 516. Axis Bank, flat, about 3 rupees higher. Coal India is up about 0.6%. Adani Ports, 0.15% lower. BHEL, 30 paisa higher. Axis Bank, about 4 rupees higher. Nifty has opened up 22 points. It's slightly higher than what SGX was indicating. 8738 is what SGX was indicating, but 8751 is where the opening has happened. If I look at some of the other names and what's happening in TCS, what's happening in some of the other SBI subsidiaries. So TCS was up around 2.5%. It's at the day's high, 2,478 for TCS. Some of the other names like Infosys and others have also followed. So Infosys is also doing well. That's SBI for you, 274, 2% higher. ITC is down 2%. No news flow, but it's looking in on the weaker side. That's SBI. 2.5% high. All the subsidiaries, whenever these news flow comes, tends to react and tends to act. So SBT is up around 6%. State Bank of Mysore is up close to 7%. That's about 39 rupees higher. State Bank of Bikaner and Jaipur, that's also up around 6.5%. Look at the volumes, 53,000 shares. But that's the only time, when you get news flow regarding this merger, these subsidiaries, that, these banks tend to react. TCS, of course, will react to the buyback meet. It's up around 2% right now. 2,460 for TCS. It's 10 to 12 rupees off the day's high, but still looking in decent. Let's look at Nestle as well. That's reacting to numbers. Down about 2.7%, but look at the volumes, 3,000 shares. It's higher than averages, but again, these sort of companies don't tend to react on numbers. They don't tend to see a lot of volume action on the numbers, and maybe that's why it's just about 3,000 shares. Let's also look at Fortis. There is some news flow in the report, media reports, which suggests that the TPG deal could be coming in soon, and it could lead to a bigger consolidation in the sector. That's up around 1.8%. And Hexaware, where the buyback has started just a few days back, yesterday was up about 8 rupees, and today has followed up by about 1.2, 1.3% in terms of gains. Gammon is reacting to the numbers, but it's a small stock. It's a very small stock when you compare Gammon to some of the others. Losses have reduced quite meaningfully. So maybe that's why that's reacting the way it is. That's Gammon for you, down about 4.5 odd, up about 4.5 odd percent. Bajaj Electrical absolutely flat. They have changed their guidance, but I don't really think that the street is focusing in too much on that. Anisha, any other names that you can pick up?
Pankaj, you had mentioned the SBI subsidiaries. All of them are buzzing, and they're the ones that are gaining on the they are on the upside, and in the broader markets, these are the stocks doing well. Then we have Gammon Infra, which is up 3%. Gammon India is up 5%. Jaiprakash Associates up 2.5%, and Fortis is up 2%. Just Style today is up 2%. We have Reliance Defence up 2%. So these are the stocks gaining on more than reasonable usual volumes. ITC is seeing a 2% cut now, and volumes are also high here. We have some profit taking coming in Aurobindo Pharma, which is down 1% or thereabouts. Amar, what are your top picks for the day today? The Nifty is trading up now with gains of about 20 points or so. What are your top picks?
Yeah, very good morning. The overall Nifty, as we've seen, it's open positive. As far as my topics are concerned, the first is escorts. We've seen a sharp rally in escorts. So escort is definitely, technically speaking, very strong on the chart. So it can be a buy around 404 levels with a stop loss of 397 and a target of 419. So that's one.
Okay, so we got escorts as Amar's top pick. Now on the Nifty, we're seeing Infosys is up 2%. It's nearly now in triple digits, and it's nearly at 1,000 rupees a share. So the IT pack has moved up well. What would you make of this kind of move? Okay, I think Amar is back. Amar, would you please complete your picks? You said you like escorts. Do you have any more picks?
Yeah, the second is Ashok Leyland. Ashok Leyland, overall, technically speaking, it's strong on the short term and intermediate trend. So, however, on the upside, it's capped around 96 levels. So, it can be a buy at 92.50 with a stop loss of 91.25 and a target of 94.70. All
right. Lancelot, would you now look at some of the IT stocks more favorably? Do you think, they have repeatedly gone lower and now seem to have done some bottom building? Do you think the outlook for IT stocks could improve from here on? One of the analysts a day earlier said that if they do deploy their free cash to reward shareholders, I would look at buying them, be it by dividends or buybacks. And now we're hearing something from TCS on a buyback. Would you consider IT stocks now?
Well, definitely, yes. I think, IT has been one of the sectors that has corrected significantly from its peaks. And I think all the negatives seem to have been already priced in. As TCS has announced a buyback, a lot of them are having this issue about holding significantly large amount of cash and how to deploy that profitably. So maybe one of the avenues that was suggested was if they buy back, then some of the cash goes back to shareholders, and as well as then improves the the overall capitalization of the companies themselves. So on a valuation perspective, most of these are trading at their all-time lows, and they've sort of just found a base or formed a bottom in that sense that we are not seeing continued falling, continued fall. And I do believe that though there may be some, let's say, surprises in terms of the H-1B visas and some impact which is yet to unfold over the next 12 months as to how these companies will address the visa issues. Those seem to have already got priced in, and probably now it should be a time to start accumulating. If there's any further decline, that would give you another opportunity to buy. But yes, these look to be attractive because many of them, even from a dividend yield perspective, would start giving you 2 to 3% dividend yield, which is reasonably good considering that growth will pick up once they change their business model and go more towards an automation or a digitization services model, which will be able to generate profits back again.
Gaurang, how would you look at Tata Motors? Last 2 days down quite significantly. Today trying to retrace, but still you would wait for the Q4 numbers?
So when I was to the studio this morning for the show, I was in a con call with our branches pan-India. We maintained our positive bias even when the China slowdown happened. We were positive when the Brexit happened. We are positive post the numbers that we've seen, which of course has led to a lot of downgrades and a lot of concerns and a lot of negative views on the counter. If you ask me, Pankaj, your downside from here is close to about 5 to 10% in the worst case scenario. And your upside could be somewhere close to about 540 to 580. This could take maybe about a year and a half plus. But with the new launches, both on the domestic business, with the scrappage policy, with the defense foray, and with the expectation that recovery in terms of global sales numbers for JLR on fallback of affordable models getting launched is going to throw in great amount of positivities. I would say that maybe in the immediate short to medium term, any recovery would be faced with selling pressure, because people would want to exit for all those people who would have bought in from a short to medium term point of view. But like I mentioned, from maybe 330, 340, I beg your pardon, 430, 440 odd levels, your downside is extremely protected.
Right. So maybe another 2-3% and you would be a buyer.
I would start buying at current levels also. Pankaj.
Okay. Even currently it would qualify as a buy.
Absolutely.
Right. Just a word on TCS as well, Gaurang. The buyback announcement that they have given, absolutely in line with estimates, but still the street would reward for that buyback.
Yeah, so I think expectation is growing, because in terms of performance and numbers, they have not done anything. So to get back the sentiments on the positive side and reinforce some amount of confidence which has got shaken up, TCS has possibly come out with this announcement, and 20th, 20 Feb, I believe is the date when the meeting is there to finalize the deal of buyback. You also heard something similar from Infosys. So, these are all short to medium term upticks, Pankaj. But if you talk on the fundamentals, long term earning visibility, well, we are extremely positive on the entire IT pack, starting with TCS, Infosys, HCL Tech, Tech Mahindra, NIT Technologies, Info Edge, Mindtree, if you will, are under our positive coverage.
Right. All of these are under positive coverage for Gaurang. Amar, what would be your view on IT pack? Any levels to watch on Infosys, TCS? Okay. I think we have some technical issue with that. Manav, if you could tell us about levels on Infosys and TCS.
Surely, see, Infosys has actually seen a very good breakout after forming a double bottom pattern, and the stock has managed to close decisively above 990 levels, and it has been trading above it since last couple of trading sessions. Most importantly, Infosys has definitely formed a very good base, and I think it has bottomed out for next couple of months or even quarter at least. I don't see the stock actually going below 980 levels on the immediate basis. So even at the current levels, there is a limited downside. But eventually, I think the upside target that the pattern formation indicates is close to the levels of 1080 to sub 1100 levels. So looking at the overall retracement that the stock has declined, so 1100 would be the minimum targets that we are looking for. Infosys, in fact, on the other hand, shows a very good strong momentum, at least on the short-term perspective. The stock has seen a very good close above the 2420 levels, which was its previous resistance, and now the stock is inching higher since it has closed above its important long-term averages. So seeing a good monthly breakout on TCS, and definitely if the stock holds on to 2400 levels, I think in the near-term perspective we could see a very good rally close to the levels of 2520 to 2550 levels.
All right, gentlemen, thank you so much for joining us on NDTV Profit and giving us your top picks and views on all the stocks that you discussed. Let's take your disclosures. Gaurang, your disclosures?
Well, thanks a lot. No personal investments in any of the stocks that we have discussed, but the recos have gone across to our clients.
Lancelot, your disclosures?
I don't have any holding in the company which we discussed, but my clients would definitely have holding in the companies.
Amar, your disclosures?
I personally don't hold any positions in the stocks that I've recommended.
And Manak, your disclosures?
I don't have any in the stocks that we've discussed. I don't have personal investments, but we do the same to our clients.
Thank you, gentlemen, for joining us on NDTV Profit today.